Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Shawn, Cruz, Head of Trading Strategy at TD Ameritrade, to discuss the June reading for the Investor Movement Index. The IMX is TD Ameritrade's proprietary behavior-based index aggregating Main Street investor positions and activity to measure what investors actually were doing and how they were positioned in the market. And while investors reduced exposure, they remained overall net buyers once again in June, didn't they, Shawn?
They did, and it was interesting that last month they actually flipped to being slight net sellers, which was the first time we'd seen that all year. But they did return to buy, and I think it's interesting when you look at the month in the entire period, they actually were net buyers in some very strong demand to start June, but in the latter half of June, they actually flipped back to net selling after we got some more economic data coming out that maybe pointed to some continued issues that have been acting as an overhang to the market, showing that maybe those were going to persist a little bit longer. So it will be interesting to see when we look at the July numbers, if some of that negative sentiment that led to net selling towards the end of the IMX period carries over into July, or if we see another round of saying opportunistic buying from a lot of our clients.
Yeah, and if we take a look at the net buys for the month here, the names that are typically up there that TD Ameritrade clients are always invested or trading around.
They are, and one thing was the buy-in was spread across quite a few sectors except for two. There was net selling in the energy sector and also some very strong net selling in the technology sector. But what we saw from the net buys, they're names that at first blush you think, wait, you said there was net selling in technology, but one of the biggest buys by and large, the Nasdaq 100 component and a major component of the S&P 500 is Amazon. There's a lot of demand for Amazon across the month, by far one of the larger equities in demand. And I think we saw this across a lot of these names that were bought. As we saw some of these support levels hold, we saw clients come in, seeing those support levels hold, gave them a little bit of confidence to go in there and buy some of the names. So we also saw that in Apple. We saw that in Tesla. Once again, always thought of as a tech company, but actually falls in that consumer discretionary bucket. And then other names like NVIDIA and Microsoft were also very popular for our clients during the period.
Yeah, and the sells were definitely a mixed bag, more in the alternative spaces, if you will.
They were. So one popular one that popped out on the list was ExxonMobil. Some of the energy names, we saw some selling in the energy sector. I think that was tied to crude oil coming down quite a bit. But if you look at some of the other areas where we saw some selling concentrated, a lot of the Chinese electric vehicle makers are actually net sold. I thought that was interesting alongside buying in Tesla. But I think it's worth pointing out some of those Chinese electric vehicle makers had some pretty good performance over the month. So there may have been some profit taking going on in that regard. But then also looking at airlines, some of the airlines are sold. Delta was net sold. United Airlines was net sold, and then Pfizer was another pharmaceutical company that clients also sold over the IMX period. So it was a pretty interesting mix, but I think by and large, there was some opportunistic buying. And I think if you're looking for how this can translate to the market overall, as you see some of these support levels hold, that I think is what a lot of investors that are on the sideline right now are waiting to see before they start to come back in. And that showed up, I think, significantly in those names that they bought. Like Amazon, Apple, Microsoft, Tesla, that showed where those levels hold, and their clients came in and maybe are now a little bit more comfortable taking some exposure into those names, but they're not, let's say, opening the floodgates and going out there and buying across the board. So you're still seeing that overall IMX indicator remain subdued for the time being.
Right. And you had mentioned, the heavyweights within the Nasdaq 100. So let's get a quick review on the charts here of what you're seeing in the Nasdaq 100. And also let's talk about vol Q to see what the volatility markets are suggesting.
So I think the Nasdaq 100, once again, we're seeing some interesting levels start to form, and it really does. It's not surprising that what you're seeing on the charts for some of these big components of the Nasdaq 100. We're also seeing that play out for the index itself. So this could be an interesting phase where we're seeing at least some consolidation, and the market now is probably in a little bit more wait and see. But looking at vol Q and vol Q trading at some of the levels it's at is telling you should still expect a 2%, up to a 2% move in either direction on any given day. So there's still some volatility being priced out there, but I do think it's interesting. You're starting to see some of those big swings that we had seen throughout April or through March, April, and May. Some of those big, massive intraday swings that we were seeing, those are starting to come in a little bit. And I think that can actually help be constructive for getting more and more investors to want to come in once again and not just take some exposure on some individual names they're very comfortable with, but maybe take more exposure to the market at large.
All right, Shawn, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.